Hey, this is Randy Finney, and today is Friday, February 5th, 2016. I just wanted to do a very quick sort of an intraday update, just what I'm seeing on the Qs. I posted my thoughts on the in the trading room. In this video, I'll just keep in the trading room. It's really not anything long term, it's near term. I guess I do have a weekly chart up here on the comp, and what I want to do is just dive into the leading index, which is the Nasdaq Composite, more specifically the Nasdaq 100, and give you my thoughts. And I say that because normally this is where I'd be pressing the shorts hard, shorting with both fists. This is what I did in the bear market in '08. Once you break these, once a bear market really starts to get underway, you see those waterfall sell-offs, especially after a period of consolidation. And as I said, that very well may happen. However, I'm erring to the side of caution right now, at least going into next week, and believe it or not, favoring a bounce. Call it intuition, call it gut. I just think that it looks too easy right now, and I think bearishness is ramped up, and I'm uh, leaning towards some type of surprise move to the upside next week that catches a lot of shorts off guard. But again, do not that feeling or the my read on the market, including my intuition, it's just not strong enough to bet it hard. This is a Nasdaq Composite. This was our bull market uptrend line here, and I did an overview of the big picture earlier today, and I talked about how just about every U.S. index is well into this bear market, or at least well off the highs. At the very least, you can say that. You can't call it a bear market until you have a 20% drop, and again, that's the standard definition. But here, back in July, is when the Nasdaq Composite peaked, the S&P peaked. Unlike the Nasdaq 100, the Nasdaq Composite, which is much more diversified, failed to make new highs. So the only reason the Nasdaq 100 did it, talked about this ad nauseum before. It's the signature of the end of a most bull markets. You see fewer and fewer stocks carrying those leaders. Carrying the market higher, and that's the nature of the Nasdaq 100. It's an extremely unbalanced index with the top 10 components making up well over 50% of the entire NDX 100. So 10% of the stocks making up over 50% of the returns. And it just shows you in this market, the money was just into the Apples and Googles and Facebooks of the world. And anyways, that's that. So let's get back to the short-term stuff here. So this is the really where in my opinion, where the bull market or bear market, by price metrics, this trend line broke, and that's where it started, and we came up, failed to make a new high. This is an alternative trend line that I have, and I put a lot of significance into this one. There's numerous reactions. This goes back to 2011, mid-2011, a couple reactions, and we've broken down and back tested. So net, that's all bearish. Longer term investor, yeah, you want to be short here and stop over those recent highs. Trend trader, anybody like that. But we do have this support, and as I said, I'm a little skeptical until I see this support level go. We've had a few reactions. We had that reaction back on back here in August, and then another reaction recently. If and when that goes, and we get a solid close, we'll probably have a waterfall, cascade type sell off, and that's about another 7% lower on the composite. So daily chart, here it is. You can see a little closer. Numerous reactions, a gap back there, reaction there, reactions there, and again, we're a little bit above it, and this is why I just don't think it's objective to short here, even as ugly as it looks. Yes, somebody pointed out in the trading room yesterday. Do you see what looks like a bear flag? Absolutely. This can be construed as a bear flag, and that may very well play out with the bear flag breaking down. But again, we have support right here, which to quantify it, just rough using the measuring tool. Now that's about less than 2% away. And now let's look at the Qs. And again, I'm focusing on the Qs because that's the leading index, the Nasdaq 100. So here's that support level we've been flirting with, but as you can see, there's quite a few pierces through there, so it's not as well defined. And this is the next key support down here. So if we want to go down to that level, that's going to be about better than a 4% drop from current levels. And like I said, it's very possible we do, but we're heading into a weekend, so anything can happen on Monday, and slightly leaning towards some surprise, whether it's government intervention, something that comes out and catches all those shorting here off guard, and we get a little short squeeze up and maybe another thrust higher. So either way, we can always position. If a waterfall sell-off starts, I can always jump in late. It won't be the optimal entry. Usually I'm in ahead of time on those waterfall sell-offs. I've caught just about every one, from the last bear market to even the last bull market when we had the down, the corrections. But let's dig down into the Qs, and I'll tell you why I'm looking at minimal downside. At least, I shouldn't say minimal downside. I should say that we're above, right at or just above some pretty decent support levels on a lot of the top holdings. And again, these top holdings, they determine where the NASDAQ 100 goes. And the NASDAQ 100 still being the leading index, down by far the most today. The SPY, at least for a while there, the SPY was holding up in the small caps and mid caps. Here's Apple. Apple, I've made a case for a long time that Apple's probably in a new bear market, actually since the April 28th high right here. That post we put in a very bearish candlestick reversal stick, and it was confirmed, and posts have been made all along the way. But you would look at it. Apple's at very nice. See the support zone here, these two horizontal lines, reactions. So, in trading 101, you want to short a break of support. Or go long at support. Now, being that the primary trend is down, yes, we had Apple. I did it personally and as an official short trade, and we caught a quick bounce, 7%, whatever that gain was, in and out. That's all. That was right. I guess that was right here on the initial tag of that level. As I often talk about, I like to trade initial reactions off support and resistance, even if they're counter trend. And if they're counter trend trades like this was, that's a quick bounce. That's why I didn't shoot for the moon and the stars, and I didn't, look at that as a long-term investment or a long-term trade. It was what it was, and we got that bounce, and we've had a couple other tests. Now, here's the thing with support. The more you tap on it, the more you test that support, it's going to chisel away, and ultimately you are going to get a break. I don't see positive divergence on the daily chart. If I did, I would be looking at a multi-month swing trade in Apple. This is what I want to see. The next long that I hold for more than just a few days or a couple weeks on Apple will more than likely, I'll need to see bullish divergence on the daily time frame, at the very least a 60-minute time frame, and that's what we had there at that initially. And actually, that was a tag. So there was our target, T1, and like I said, T2 was an unofficial price target, and still is for those of you bullish Apple. I know most of the world loves Apple. I mean, great products, but again, I'm looking at the charts here. I'm not talking about the stock from a fundamental perspective. Here's a near-term trend line it needs to hold, and so it's at support with that near-term uptrend line right here. There's also this downtrend line. We had a whipsaw breakout there. Fortunately, we were able to exit our long here, both official on the site and personally got out of that, and then boom, went back down. Now we are, that trend line has been sliced through a few times, which in my book takes away from the validity of it, although I wouldn't completely eliminate it yet. Sometimes I will see a whipsaw breakout. This is another breakout and back test right now. Maybe this back test holds. Like I said, that's some pretty nice divergence there on Apple. Gosh, if we weren't, if the trend indicators weren't all bearish, I would be quite bullish on Apple. And, there's still easily the possibility that this stock does go up and maybe even it goes on to hit that second target. So, for those of you who are bullish, there's an objective entry right there. There's dual support. There's this near-term uptrend line support, this downtrend line. There's this would be my stop if I were to go long Apple, slightly below 93, either on a daily close to be safe, to give yourself a little room, or maybe at least a 60 or 120-minute close below that level, 93-ish. That would give you a downside of, what is that, 2.25 points in the stock, and your upside could be as high as that 105-ish area. So that's enough on Apple. But again, the main reason for doing this video is to point out that Apple, yes, it's sitting on a cliff just like the market, staring down, and if that level goes, that's a pretty big level, and Apple can fall quite a bit. Longer term chart still looks like it's in the early stages of a bear market to me. Let's move on. I won't spend too much time on Apple or any of this. We'll wrap this video up. Here's Google. This is Class A shares. Very nice. I've had this yellow line here because that was a key resistance level. We gapped above it. That was a very significant gap. But now we've come back. We backfilled it, tested it once. You can see perfect. Look at these candlesticks. 1, 2, 3. This we have a candlestick body. In other words, that was an intraday break. That candlestick tail or wick right there, and our shadow, and we closed back above it. Now, what did we do? We bounced off that level again today so far. So there's support. This is why I'm not shorting the Qs. Yeah, does that look good? No, we see a bearish crossover here about pending in the MACD. So support is support until it's broken. In a bull market, you want to go long, position long, add to your positions here. In a bear market, I'm more on alert for a break of that support to be my sell signal. But I'm not going. I don't want to go ahead and heavily short the market when so many key stocks. We backfilled this gap. We're there again. I think it eventually goes, but the possibility of one more bounce. Maybe next week on a big gap up or some type of surprise news is possible. I just, I don't play coin toss trades in the market. If it's 50-50, I'm not going to play it. But I'll be on the, keep things light and watch and see what happens. There's Microsoft. Look at this level. That's a support zone I've had here for a long time, former resistance zone, and we came back after breaking out of this pattern right here. We fell down, hit it, and now here's where we're at. I'll grab it and I'll measure down to the top of that support zone. That's only 2.4% lower, and to the bottom about 3.74. And that's why I said earlier in the trading room, I see anywhere from 1 to 3% downside on some of these key components. Here's Google. This is, well, we already looked at Google. Same story. This is just the other shares right at that support level. Facebook. S&P, I think you had a great trade on Facebook the other day right up here. Nice shot, and probably a nice cover, because what happened is this is support where that the bottom of that gap. We overshot it a little bit, but now look where we're at. If I put the crosshairs there, that candlestick body, we're currently trading right about at the bottom of that gap. This was a momentum overshoot. If it goes much lower, there's not a lot of well-defined support level until down to this area right here, about 99.20. However, there's a lot of supply here. In other words, a lot of trades occurred. And, if it does want to move lower, that would be a pretty solid, or, I'd say pretty solid support around the 99.30-ish level. Now, given that is, let's try to grab the body of that candlestick there, the bottom of it, where prices are trading, and that is 5.3% lower. So, we could get a quick plunge, a quick washout move here in the markets next week. But I wouldn't jump in on it until all these levels go. Here's Amazon, another one of the top components. I didn't mention this. I'm going down in order. I have my watch list. You can't see it on the screen. It's to the side, and I sort all the QQQ components by market capitalization. So we're going from starting with the largest down to the, going down the line here. This is Amazon. This is a support, former support, or a current support level, I should say, that I have here. Reactions, top of or the bottom of a gap. And we're just above that now. So like I said, not far off support. Hard to measure that. Let's try to grab it. 3%. Like I said, 3% on a lot of these. If that level goes, then we're looking at a move from current levels in Amazon to the next key support level that's all the way about 12.25% lower. So, if we get that waterfall sell-off, like I like to call it, and that's what happens in bear markets when you consolidate, go back to where we were. Qs have been consolidating recently right here, that flagging action. So what I'm trying to say about a waterfall sell-off, this is a waterfall sell-off. That would be a flagpole on a bear flag pattern. So if that is a valid bear flag pattern, then what you would expect is a move down roughly equal to the flagpole following this downside break. My only problem is, like I said, it's just a little too easy, and something in my gut tells me they might try to roast the shorts on this one when something looks too good to be true. It often is. Not always, but sometimes. So there's Amazon, Comcast. I don't see much. So again, I'm going down in order here. Here's Intel. Yeah, a little bit busy chart, but there's a nice support level right here. And that's just about a little under 3% below. Gilead, biotechs. I told you the biotechs still look, as good as anything right now as far as, high beta, stocks, and these are, a lot of these are in the NASDAQ 100, the biotechs. And it bounced off support, this support level here. These were old former targets and things, and it backfilled. There was a gap to backfill, so the price action's been okay. And long term, no. For a bounce, yes, I still have my slight small long position in both the Qs and the biotechs, and yeah, they're underwater now, and we'll see what happens. I'll probably even take them home over the weekend. I'm not sure. May hedge up. We'll see. I want to see what happens today. And there's Cisco. I haven't updated this chart in a long time, so let's just do this. You can see these reactions here: reaction, reaction there. So there's Cisco again, another one of the top components of the Qs, sitting 2% above major support, and let's just end it there. I wanted to keep this video short. It went longer than I intended. So that's it. There's too many key components that are above. I wouldn't call them critical support, but pretty decent support levels, and as such, I just don't think the risk to reward is there right now for being aggressively short, even though there is a potential for a waterfall sell-off just based on where we're at, in the longer term charts with, the index is breaking down this potential bear flag, looking at the weekly charts, had this initial thrust down, a thrust up, and this could be now, I talked about the powerful wave 3 down. And if that happens and we start really just things start melting down tomorrow, that's probably where we're going to go, is all the way down here in the Qs to the, ultimately if there's a waterfall sell-off down to around this 75 level would be my target. I should say my next target would be here, 83.60-ish, and then down to about the 75-ish level. So there's still plenty of meat on the bone, and sometimes I'm positioned ahead of those big moves, and sometimes I have to get in a little less favorable price. But I'd rather have at this point. I think it's better to be safe than sorry. So with the weekend coming up, let's see what happens. I'll try to post some updates before the close, and maybe over the weekend as well.